With the crypto market in chaos right now and the market down over 50% from its all-time highs.
Every day, technology does something better for the world. Imagine evolving currency from stones to coins to processed paper, and now currency is digital. You don't even need to hold it in your hand or see it. How impressive is that? Super! Cryptocurrency has not only made the world more digital, but it's also become an excellent means of earning money and growing your net worth. It's only been a decade since its introduction, and people are sure by the next decade, the crypto market will produce billionaires. The crypto market keeps expanding, and today, the bear market is at our very disposal. But not many people know about this. So today, we're going to talk about the crypto bear market and why it is here. But before we begin, here's a quick reminder to like this video, subscribe to this channel, and turn on post notifications for this channel. Firstly, what is the crypto bear market? To put it in simpler terms, a bear market is a declining market. Bear markets are defined as a period of time where supply is greater than demand, confidence is low, and prices are falling. It's notoriously difficult to predict when the bear market might end and when the bottom price has been reached, as rebounding is usually a slow and unpredictable process that can be influenced by many external factors, such as economic growth, investor psychology, and the world news or events, but they can also present opportunities. After all, if your investment strategy is long-term, buying during a bear market can pay off when the cycle reverses itself. Investors with short-term strategies can also be on the lookout for temporary price spikes or corrections. And for more advanced investors, there are strategies like short selling, which is a way of betting that an asset will decline in price. Next up, 2021 has been pretty hectic for crypto traders, with the currency falling by the day, and people are not quite sure if they've hit a bear market just yet.
There is simply so much going on in crypto, it's crazy.
Also, will this down wave only be for a couple of months or years? Bitcoin dropped more than 30% in May, the worst drop since November 2018. In 2019, it traded below the 200-day moving average on 3 occasions, but that has remained above this line for the last 13 months. Elon Musk may have been the trigger for the latest sharp drop, and in doing so shot himself in the foot, given Tesla's $1.5 billion purchase of Bitcoin in February. But there were signs of weakness, notably a range-bound market since February. That's an unusually long time to remain range-bound without a decisive breakout in either direction. The longer the price failed to break out on the upside, the more likely it was to break out on the downside. Of course, the crash also came at a time where there were more first-time cryptocurrency investors, from financial institutions and companies that have loaded up on Bitcoin to Dogecoin buyers, from whom this may have been their first experience with a major dip. There will be some aggressive corrections along the way, but with each bear market, BTC moves from weaker to stronger hands. Up next, there are different phases to a bear market that crypto traders should know about. The first phase is characterized by high prices and high investor sentiment. Towards the end of this phase, investors begin to drop out of the markets and take in profits. In the second phase, stock prices begin to fall sharply, trading activity and corporate profits begin to drop, and economic indicators that may have once been positive start to become below average. Some investors begin to panic as sentiment starts to fall. This is referred to as capitulation. The third phase shows speculators start to enter the market, consequently raising some prices and trading volume. In the fourth and last phase, stock prices continue to drop but slowly, as low prices and good news starts to attract investors again. Bear markets start to lead to bull markets. Up next, people are eager to know how long the current bear market will last. Though the crash at the end of 2017 led to a bear market that lasted years, what some in the industry refer to as crypto winter. Earlier investors remember the mid-2017 drawdown of 25% in a single day. The price then stalled around the same level for about 6 weeks before taking off on an epic bull run. The recent crash had investors asking if this is the start of another bear winter. Chris Bernesky, a founder and partner of Placeholder, said that the situation reminded him of a parable about an earthquake witnessed by both elders and the kids who never experienced one before. The little kids were freaking out that the world was about to end. What's going on? Bernesky says, and the elders are like, no, it's not an earthquake. It happens now and again. He went on to say, for the veterans in the space, this is an earthquake. It's a pretty bad earthquake, but we'll survive. You don't think it's the time to sell. It's the time to hold. Still, it's hard to predict whether Bitcoin goes up or down from here, at least in the coming days and weeks, because Bitcoin produces no revenue and has no underlying business model. It's pointless to apply traditional Wall Street methods to come up with a value for what it should be worth. Next up, the fact that there is an ongoing bear market doesn't stop cryptocurrencies from functioning. Many investors still want to go in as the average to trade is buy low, sell high. The question in this regard is a bear market a good time to buy? Plainly, yes. A bear market can be an opportunity to buy more stocks at cheaper prices. The best way to invest can be a strategy called dollar cost averaging. Here, you invest a small, fixed amount, say $1,000 in the stock market every month, regardless of how bleak the headlines are. Invest in stocks that have value and that also pay dividends, since dividends account for a big part of gains from equities. Owning them makes the bear market shorter and less painful to weather. The most important thing to understand that a bear market can be a very difficult one for long investors, because most stocks fall over the period of a bear market, and most strategies can only limit the amount of downside exposure, not eliminate it. Up next, although the crypto bear market means a decline in the value of digital currency, one can still make some money out of it. So if you were planning on pulling out all of your investments from crypto, you should hear this first. Even when the market is in an overall downtrend, there are still several ways to emerge profitable. Firstly, you can make money from short selling. Shorting or short selling is effectively the opposite of buying a coin and hoping for the price to increase. In short sale, you borrow coins from the exchange and sell at the current price. Once you close your short position, you then have to buy back the same number of coins at the current price in order to give the exchange back the same volume of coins. Therefore, in a short sale, the most desirable situation is one in which you initiate the short position at a high price and close your position at a low price, thus selling high and buying low. This technique is typically used to hedge portfolios and reduce risk, but can be a powerful tool when facing an extended downturn in the market. Also, you can make money through swing trading. Swing trading takes advantage of the short-term price movements in a coin's chart, rather than looking at the large macro trend. Within a confirmed upward or downward channel of price movement, there will always be small peaks and valleys in the price as it moves in that general direction. Experienced traders can thus make money off of the micro trends, buying the lows and selling the highs during a bear market. In this scenario, the market volatility during the crashes is the ideal situation as it provides the most number of useful optima in the chart. In order to swing trade, you must become familiar with the various forms of technical analysis, such as pattern formation and indicators such as RSI. And lastly, you can make money in the bear market through passive income coins. If you have a lower risk tolerance and do not want to use more advanced trading methods, the next best thing is to hold on to coins that generate passive income regardless of market activity. There are many coins that can generate passive income, but the two main types are staking coins and exchange coins. Staking coins, in exchange for governing the network, provide additional coins for each coin used in the staking process. Expect somewhere between a consistent 5% to 10% annual return for staking in most coins. Up next, now the real question is, will crypto rise again? As for now, it is impossible to predict. The crackdown in China and the calls for greater regulation across the globe could impact the decentralization of crypto, and the environmental concerns are still an issue. Given its volatile nature, it is possible that crypto will gather momentum again at some point in the future, perhaps weeks, months, or even years down the line. Though remember, if it rises too quickly, it could fall just as rapidly. This is because crypto's price is based solely on speculation. In other words, it's a gamble. So don't invest all your hard-earned savings in cryptocurrency. Next up, just in case you were wondering about where the term bear market originated from, it is believed to have been derived from the way a bear attacks. Bears are known to attack by swiping downwards with their claws. There is, of course, a long history of theory and evidence around the origin of the terms. That is a wrap for today's video. Thanks for watching, guys. Here's a quick reminder to like this video, subscribe to this channel, and turn on post notifications for this channel. Make sure you stick around for more exciting content on this channel. You don't want to miss out.